the small cap stocks that we trade, those investors, hedge funds, they have no plan to hold on to that stock to like see it through the company's success or whatever. And you kind of have these like this kind of action. Like I think they did a warrant exercise here. They 100% are not going to just let this come all the way back down and not have a short. It keeps these small cap companies going, right? Because they're not generating any revenue. So they're not generating any revenues. They're basically losing money. They're burning cash on a regular basis. So the only way to keep going is to...
Hey, what's up, everyone? Welcome back to another episode of Trading Takes, presented to you by Investors Undergrad. I'm your host, Sam, and tonight we've got another very special episode with another very special guest. This is an episode that I wanted to do for a long time, and it's part of my process on a day-to-day basis when it comes to my own trading. Tonight, I'm joined by Jason from AskEdgar, a 10-year trading veteran who's built some of the smartest tools when it comes to researching and breaking down SEC filings. Who better to chat dilution with than the person who has literally created tools to help with his process every single day? Tonight, we're going to be talking all things dilution, why it matters, how to spot it, and how to fit it in every single day of your trading. Let's get into it. Please welcome to the show. I mean, so like I said in the intro, I'm so excited about this one. Jason from AskEdgar, how are you doing?
I'm good. Thanks for having me.
Oh, thank you for being here. I love what we're going to talk about tonight. I could talk for hours about it, so I can't wait for tonight. Obviously, we're going to really dive in deep with dilution. But first, before we get into that discussion, you could just tell the audience who are you, a bit about your history and your background, and perhaps a bit about your trading as well.
Yeah, so I'm a trader, and I also co-founded a company called AskEdgar, which is a research platform. As we were talking about, I've been mostly in sales work, but I've been trading since 2015. So I went full-time a couple times. I tried to go full-time back in 2017. Didn't work out too well. And then again, I went full-time in end of 2022.
So that's your 10-year anniversary this year then?
Yeah.
Congratulations. That's hell of an achievement in itself, for sure. I'd love to know the success rate of people making it to 10 years. I can't imagine it's that high.
Yeah, I mean, you just gotta not blow up, and as long as you can make it and get enough experience, you'll eventually figure it out.
Yeah, completely. Yeah. So how would you describe your trading now on a day-to-day basis?
Yeah, so like with a lot of people, I'm a small cap short seller for the most part. So I short sell gappers, and then I will long, but it's mostly swings. So I'll swing long small caps based on filings, and then also like multi-day runners. And whenever there's any theme is when I'll be a little bit more inclined to long, but I'd say most of the time I'm shorting stocks.
Yeah. I mean, that's you and me both. So I think we've got a lot of common interest there. That's for sure. Now, I think it's fair to say you've got quite a unique view on dilution. But just before we perhaps explore that, I mean, how did you get, like, obviously it's a passion of yours. Obviously, it's something you do a deep dive into every single day. How did you get interested in it?
I mean, just like with anybody else who's starting out trading, I'm looking for any sort of edge. And I just thought, obviously when I was struggling back in the day, I started trading in 2015, and I started looking into filings, I think around 2017, inspired by guys like, Michael Good. I think Alex Temez at the time was doing some stuff on filings, Eric Wood. There's a lot of other people that kind of inspired me, but just thought that like the secret sauce will be found in the filings. I mean, it wasn't really, and we'll kind of get into later, sort of like how I use them. But it was kind of like me thinking, the filings are the key. The filings are the key. That I got really into them. Kind of like with any other strategy, you kind of like dive into it, and you gotta test different things to see what works and what doesn't. But it was really what got me into it was just thinking that was like gonna solve everything. That was
Yeah.
what got me into it.
Yeah, I feel you there, and that was kind of similar for me. And like, it was just that it just, to be honest, it gave me a lot more conviction and confidence in general in the setup. If I knew and understood that there was an agenda at play, that just seemed to help the whole thing click for me.
Yeah.
And since then, I've just tended to stick to. I mean, it's just the less red flags as possible, and
Mhm.
and I have like an all-day fade kind of checklist. And obviously, I'm just looking for something that scores highly, and anything that has dilution needs cash. And like these typical small cap dailies that start in, I say they start on the top left, they're now in the bottom right. They're typically pretty good candidates, right? I mean, to what extent would you agree with that?
Yeah, I do.
Cool. I know that's a good start. That's a good start. So I mean, we got to let's just get into it. Like, what is the role of dilution in small caps? What's the purpose of a small cap company typically?
Well, I mean, it's kind of what keeps these small cap companies going, right? Because they're not generating any revenue. So they're not generating any revenues. They're basically losing money. They're burning cash on a regular basis. So the only way to keep going is to raise money by selling their own stock to investors through these dilutive offerings that we see. So that's what makes the small cap world go around, really, is dilution.
Yeah, absolutely. And I think like in a lot of cases, something that Chris from IU talks about is actually a lot of the CEOs and etc. of these companies are actually incentivized by how much they can raise. They're not going to raise money. Well, they're not going to. Obviously, they're not going to report any profits, so they can't ask for a cut of that. So,
Yeah.
their incentive is actually we have to, and we see that time and time again. There are some like real serial offenders, and all of a sudden, like the CEO will come out and he'll start blaming, like GNS, for example, for
Yeah.
like such a classic one. He comes out and he goes, "I'm going to blame all short sellers for the price of the stock," and it's like, yeah, man, you just gone from further from the top left to the bottom right. It cracks me up every time.
Yeah, no, some of these guys, it's like that's their business. They have this like, okay, we're in this preclinical phase or whatever with this drug, but that's not really the business. The business is pumping the stock to raise money.
Yeah. I mean, that PR, like I'd really find the honesty funny if they just said, "I'll go to PR. We have no data. We're just pumping because we have to sell some stock." I mean, it would be refreshing honesty, that's for sure. And like just to touch on that, whilst it is obviously important just as we discussed, it's important in small caps for that reason. What's the impact that it has?
I mean, it puts downward pressure on the price. But like we'll go through a couple examples. It's not necessarily like it takes time for the dilution to actually like put pressure on the price. We'll go through some examples, as I mentioned, with like what's actually causing the stock to fade on those gap up days, Yeah, I mean, the fact of the matter is at the end of the day, the result is that it just puts downward pressure on the price because you're adding more shares to the float. So you're decreasing the value of each share of stock.
Yeah, absolutely. No, I mean, absolutely. I mean, and often it's typical of that's the end of the move as well. Like, the agenda complete, job done, and whoever they are, their mission's accomplished. They made their bonus. And I joke actually, like when you get like an offering at lunchtime or something, I joke that the algo is pub by lunch for example, because it just seems to be the case. Like offering a lunch on a Friday, yep.
Yeah.
We're done for the day. Cheers. Mission accomplished. And obviously, obviously, like you said, you focus on dilution with your trading. What other considerations do you have as well alongside that?
Yeah, I mean, it's really for me, it's catalysts. So that could be an offering. It could be a warrant exercise. I'm looking for I'm looking for a reason why there would be dilution, right? Because there could be warrants, there could be an ATM. They could have the ability to do an offering, but I'd want to look for clues or like a catalyst that would give me evidence that that's actually what's going to happen. So, yeah, I'm looking for catalyst clues in the filings that would lead to dilution, but also really, as a short seller, it's any negative catalyst. So an offering is obviously one of those, but things like reverse splits, potential delisting, bankruptcy, um, things like that. So basically, when I'm short, I highly prefer if there's some sort of negative catalyst looming, and if I'm long, then I prefer that there's a positive catalyst looming, because that kind of that gives you an advantage, right? Because when there's an offering coming, uh, it's longs are going to be less inclined to be holding that stock, right? And even if you think about like Discord pumpers, like they know this stuff too, and they don't want their subs to be caught in if an offering could be happening, like they don't want to be pumping a stock and have their subs caught in an offering. So overall, that just leads to less demand all around, is when you have that negative catalyst looming.
I mean, it's interesting though, and I don't want to I don't know. I don't want to spark a war or a conspiracy theory, but I do think on that though, sometimes it is funny though how often it just seems like, obviously there's so many rooms out there, and some will get pumped into a negative catalyst though. Because it just seems like uncanny how actually all of a sudden something has ridiculous volume and everyone's all over it. Then all of a sudden, like, an hour later, good night.
Yeah. Well, so the other thing too is, well, they will, like, some of these pumpers will be compensated, right? So like, even if you see, I won't name any names, but you'll see like YouTube.
We don't want a war on our hands.
It'll say that so and so has been compensated X amount of dollars. That's not always so that they can pump for an offering. It might be for some other reason, but yeah, they'll compensate. Discord, big Discord rooms, YouTube. Guys with a large YouTube following to pump stock.
Yeah, absolutely. And just before we get like really stuck into it, there's obviously lots of types of dilution, and I think it's worth clarifying that we're focusing on small caps. Like HIMS, for example, they recently did something. I remember a couple years ago, Nvidia did, and I remember all the laughs someone got when everyone was saying, "Oh, Nvidia's worth nothing. They're about to do an offering," and it's like. No one cares. So you just clarify, I suppose, for our viewers, just the difference between the two.
Yeah, I mean, like, it's toxic offerings are going to be priced like well below the market price, right? So if like the stock's trading at 2, they do an offering at 1, like that's pretty toxic. Whereas you'll see examples too where a biotech will release phase 3 trial data and it's really good, and the stock will go up 100%. It'll go from like $10 to $20, and they'll do the offering at $20. And the guys that are buying into this offering, they have no plan to sell that stock at all, or they won't include warrants in the offering. It's kind of hard to like give a definite like, okay, this is toxic and this isn't toxic. There's some like things to consider, but generally, if it's priced well below the market, if they do it a lot, if there's warrants involved, that's another thing. If there's warrants involved, that's toxic. Those are some things to look for in terms of if it's toxic or not. Because some of these companies that are quality, they'll raise money because they actually do want to advance the company, advance that drug commercialization. And the investors that are buying into the offering, they actually want to be along for the ride in case the company gets bigger, gets acquired, or whatever. Whereas like the small cap stocks that we trade, those investors, hedge funds, they have no plan to hold on to that stock to like see it through the company's success or whatever. Their plan is immediately sell as soon as they have a profit.
Yeah, and like I often describe, like I was chatting about this earlier. I said like the companies that we're typically talking about are the type that are more likely to delist by a huge amount than they are to become the next insert a big company name, Tesla, whatever it is, right? I mean, Tesla's a really extreme example, but
yeah,
that's what we're talking about. We're talking about companies that the trajectory is like literally you look at the daily chart, it goes from the top left to the bottom right, and there's a good chance that they probably won't be around in 5 years or less.
Yeah, very rare. I mean, I could probably count on my hand the number of stocks that seemed to be some crap small cap company, but now they're like drug, for example. I think they're probably still trading at like I just want to look at the chart real quick. Yeah, they haven't even given back too much of the move, but they went from like $1 to like 80. That's because they had apparently they have a legitimate drug, and the guys that invested in the company that bought in the offering or the private placement, I forget what it was, they're probably still holding.
Right. Yeah. Yeah, completely. I mean, I remember a few years ago, and I think this is when I perhaps was just redefining my criteria for entering a trade and for it, make it becoming a setup. And I perhaps just traded that playbook a little bit too broadly. But I remember there being like quite a few examples of what you just described, where someone would release positive news, there would be an offering in after hours, and it would just get soaked, and it meant nothing.
Mhm.
Um,
Yeah.
Conversely, we'll talk about some examples from recent. You've got your screen ready, so I mean, a good one, and I don't know if you've got this one ready to try, and I get it wrong because I always get but CLRB from
Oh yeah.
yesterday and today. Um, I mean the actual offering headline was it came quite late in the move, but I was actually short
Yeah.
this one and pretty decent.
Yeah. You were short yesterday.
I was short yesterday, and I was up this morning, and I got that 4 a.m. pop as well.
Yeah. Oh, nice. Nice. Yeah, so this one so it's funny because I wanted to trade this one because the first thing I thought was like, okay, this is our site by the way, AskEdgar, was that they need to raise, just looking at their what the this comes from the 10Q, so this is what management says about their financial condition. You can also see the history of how much they've done offerings and then the ability to do an offering. They actually it was a warrant exercise is what they did. Basically, what they did was they took the existing warrants and then they reduced the exercise price to get these guys to exercise the warrants. Um, so knowing all that, I was like, okay, well, the plan's probably going to be an offering. But at the very last minute, I looked because one of the things I'll do with these biotechs is I'll always check to see if there was any big gap down, as you see here.
Yeah.
And then I'll see what the reason was for that gap down. And if it has anything to do with like the I guess the drug that they released positive news on. And it's not always the case, but if it's something that seems like it like mitigates the news that caused the gap down, then in a lot of cases I'll be less inclined to sell it short. So on this one, it was like right before the market opened that I saw that, and it didn't look like it necessarily, because basically this was the FDA saying, hey, like we need you to do like another trial for this drug, and then the news here was like some sort of fast track designation. So it wasn't like they still have to do the other trial, so it's still not good for them. But last minute, I just decided I'm just gonna stay away because I'm not totally sure.
Yeah.
But like SPRO was another one that's kind of like that. I've actually was long this last year and I sold, I don't know, sometime in here. But this is a similar situation where it gapped down, and then they had to do another trial, and that trial is successful, and you still see it still holding up. So it's like, it's kind of going back to where it came from.
Yeah. Yeah, quite. And like with CLRO, so just to touch on the dilution of it though.
Yeah.
So there's a warrant inducement this morning. And like from what I've seen, that's just really very typical. Now you've also described how you look at dilution a little bit differently, and that perhaps like everyone sort of assumes that, say the warrants are at, I don't know, $1, that they're going to run that price to $1 exactly, and that's going to be the peak of the move. But you obviously think about these, you think about dilution differently to that.
Yeah, because like with warrant inducements, often they can, well, like we saw, they can reduce the exercise price. So even though the exercise price might be higher or it might seemingly out of the money, the fact of the matter actually is that these warrant holders are rarely exercising it, because let's just say, for example, the warrants were at, I don't know, 50 cents, just for argument's sake. It's better for them usually to just short the stock, right? And then cover on the open market, especially if they think it's going lower and they obviously know a lot about the company, because they can keep doing that over and over again because they can't lose money. The reason why is because if they shorted the stock at 50 cents, let's just say the stock went to $1,000, they can't lose because they can always exercise those warrants and cover their position at 50 cents, right? So it's like, it's basically a risk-free trade for them
Yeah.
every time the stock pops near the exercise price.
Yeah, quite. And I just wonder actually at this moment whether it's just worth clarifying what, just for our viewers, just in case, what a warrant is, just in case anyone's not familiar with that type of dilution.
Yeah, so warrants like an option. So it's a derivative that gives you the right to buy a share of stock at a particular price. So if a warrant's at, like in this case, actually the warrants were at like $5. So they would never exercise them because that warrant, what it does is it gives them the ability to exercise that warrant for $4 and then they'll get a share. But why would they do that? They can just buy shares for 40 cents here. So it's warrants basically the same thing as an option.
But that's really demonstrates as well, like this, how, I don't know, for want of a better word, how crap the company is. We're talking about it was a $5 warrant that was reduced to 30 cents, I believe,
Yeah.
which is so we're talking like 5%, 6%, or whatever it works out exactly.
Yeah, we already changed them on the back end. So actually, I don't even remember what they used to be. I'll have to go back and check. But yeah, they were these ones. Well, these ones like 250. These ones I think were like $4 or so. But yeah, huge reduction in price.
Yeah, and when you actually, so when obviously with the when you actually get an inducement and there's a reduction in price, does that mean those warrants have actually hit the market though? In comparison, obviously you touched on how often they'll hedge, and that might be the goal, and then they won't actually, those warrants won't actually hit the market. But in this case, they
Yeah,
would.
yeah. In this case, they are, and likely what they're doing is they're probably just shorting the stock, right? So they're short a position at. I mean, not like they profited a ton off this actually, just based on where it was trading, but still, they're probably short higher than the exercise price, and then the company came to them and say, hey, if you exercise these warrants, we'll reduce the price all the way down to 30 cents because we need the money.
Yeah.
So like, okay. And they were probably in discussions before all of this stuff happened. So they were prepared to get short. They're short a bunch of shares. And then now they can just exercise the warrants at 30 cents and cover their short from wherever they were. Let's just say they're short at like 50, 60 cents.
Yeah, and I mean, I'm pretty sure they had other options of dilution available to them as well, but I think it might have been an ATM
Yep.
or. And like through your research, have you found that, like, obviously there are lots of types, and we will go into those, but why? I mean, why such a? This is like probably one of the most toxic ways they could have done it.
You mean why not do like use the ATM or do
Well,
put
why
it?
not use the? Yeah, exactly. Why not use the ATM or yeah?
That's a good question because it would have been probably the same amount of dilution, right? If they were selling the ATM at pretty much the same price that they sold the shares at. I don't know, not sure.
No, I mean, I could only speculate, but I assume that. I mean, they must have had. I assume it. So when it just reeks of desperation. So I just assume that. I just assume that they're desperate.
Yeah, well,
Um,
and now they can do both. Now they can still they did the warrant exercise, and now they still have an ATM that they can use.
Yeah, and they probably got a reverse split coming as well, right? That's probably not too far away.
Likely, they're not. They have this bid price issue here, so yeah.
So, I mean, it's interesting, like all the information that you have displayed here. I mean, it's quite similar to a dilution tracker as well. I think it looks like
Mhm.
it's in a lot more detail than dilution tracker before. Sorry, apologies if I offended you by bringing
Oh,
up. Um,
no,
you t-
Dilution Tracker is it's an amazing tool. I know one of the owners. So I almost feel like a little guilty, because this is sort of was inspired from them, this rating, for example. But yeah, I mean, it's an awesome site.
but this is what I like about it. It's clear, like I mean, very clear. They need cash. I mean, and then what I love though about this is that you've got information here, some serious detail here. I mean, just I don't know if there's there might be a better example for you to flick to, but what are you like drawn to first when you're pulling up, when you're starting your research on a company?
So I guess the first thing I'm always looking for is the news. I always want to see why it's running. Like, for example, if this was a crypto treasury deal, then I would probably approach it a little bit differently than anything else
Yeah.
because that's a really hot theme right now. So it just would result in little probably different expected behavior, right? So I'm always looking at the news first, and then because I always come here too because I want to see if an offering is the agenda. That's kind of one of the first things I look for. Um, and then I go to this insights tab, which basically flags a lot of things from the filings in the news. So this key dates and timelines. Um, I want to see if there's any potential catalyst, positive or negative. So like if they're voting on a reverse split, if it looks like they have some an EMA authorization. I want to know if there's something upcoming too. Because I too many times I've been short something and I didn't even realize that they had like data coming up in a couple days, or they're presenting at some conference, or they had some news coming out. So I want to be aware of any catalysts, both positive or negative.
Yeah. Yeah, I mean that makes so much sense as well. Yeah, I'm just it's just striking as well. How it's very concise in that within a page I could see they reported a net loss of 6.6 mil in Q1.
Oh yeah.
I mean, this is yeah, and I think it just further iterates our point that like we're not trading good companies. We're trading some of the worst companies that there are.
Yeah.
So there's a couple more examples I think that were really striking this week. My brain's completely frazzled though. Was it MTCR or MCTR? My head is all over. I got CR. I keep saying CLBR or something as well.
CLRB, MULN, oh, MCTR.
MCTR. That's MCTR. Yeah.
Yeah. So this one, it's funny. Like the other thing too is I put these companies in like their own little buckets. So MCTR, I know immediately just by looking at the fact that they're always going to have no dilution, really nothing here. It's just going to be all green. But then you see the underwriters here. So I kind of know which underwriters are going to be involved in these China pump and dumps. So one is the underwriter, two is the country, but it's not always the country. So sometimes you might see like, it'll never be American, but you might see Canada, you might see the UK. But if you look at the executives and directors, they're all going to be Chinese. But this is just like in a different bucket. So like I already know that an offering isn't really the agenda. So in this case, I just go and look and see what other stocks that these underwriters have been involved in. We actually have a bot for that, actually, our underwriter lookup bot. Where is it? Here. Where I actually pulled up some charts here. So MCTR. I could see that it was very similar to, this is GSIW, this move, same underwriter, same, I can't remember how long after the IPO the move was, but that was kind of similar. DGNX was another one. And then BMGL also had the same kind of move here, you see.
Yeah.
So I'm basically just looking for similar examples in this case. And it's not even just with these Chinese pump and dumps, like even with like CLRB, for example. I'll look and see if CLRB had released similar news in the past and what did it do on that gap. So to take a step back, a lot of what I'm looking for also is I'm looking for like how did the chart perform under similar fundamental circumstances, I guess you could say. So yeah. I most kind of look at fundamental patterns similar to technical patterns. We're like, okay, this is a head and shoulders pattern, or like certain fundamental patterns, like these are the same people involved. It looks like the same chart setup. This is kind of like the same setup to me.
Mm-hmm. Yeah, I mean that makes a ton of sense, and that's like what I refer to as well when I say like typically go like top left to bottom right, and I'm obviously like across that time period, across however long I'm looking, a year or two. Typically what we tend to see with a lot of these names, and what I tend to look for as well, is a high volume day that sells off, whether that for whatever reason, and like you stated, if they aren't actually using that dilution, and it's because they're hedged, and that process can be repeated a few times. Like you said, they've always got the upper hand there.
Yeah, and the thing is that these, like, for example, when you have the same people involved, the same underwriters, or like with CLRB, you have the same like funds involved in the offering. Like they all have their own like little playbook, just like us traders. we're not going to just trade differently every single. We have like the same approach whenever we see a setup, we trade it the same way. We have the same approach. Like funds are no different. They have their same approach to certain situations. So I think if you can study those, then you can have an edge.
Yeah, absolutely. And if we could just go back a second to, you said that you don't get much information from their cash position, this page. And we typically see this with a lot of, I mean, this is quite typical of the information that we will get for something like MCTR. I mean, I've always wondered, why is that? Why is this just how they presented their, I mean, is it phony?
Well, yeah, I mean, part of it is probably like almost like a fake company. You know, it'll even often show like that they're cash flow positive. You know, it's just they just have kind of like a different MO. Like I said, it's like their thing isn't to raise capital because they don't really need capital. Their game is to like pump and dump the stock so that insiders can sell, essentially. And then after that's done, I mean, that's not necessarily the end of it. I mean, you do see these Chinese pump and dumps run again and again, but honestly, I don't know the reason. After like the initial liquidation, when they're running it again, I guess that somebody's just accumulating it, running it, and then selling again. That's just a guess. But
yeah. I mean, there's a few that we've seen repeat those moves like more than once, and I think that's probably a good justification. I think as well they just tend to have a more natural market after that point as well, because there are people bagged and they might be some phony PR, they get the last few out, or it just has, some volume out of nowhere. But I think this is a really interesting point though, that like, whilst like the focus of tonight is, I mean, obviously it is about dilution, but at the same time, it's also about small caps. And I think it's interesting that actually the most important piece of information that you get from this screen is who the underwriter is. I think it's interesting as well that you can quite easily pull up several examples as well, because like with that information on that, MCTR is a good example, that information that you've pulled up from those other few examples probably means that actually day one it's not a short.
Yeah, I mean, if you look at MCTR, it took another day. It looks like, well, it kind of did the same thing yesterday, but I was shorting it today because this day was looking very similar to, I'll pull up the GSIW chart, but this part here, and then where's GSIW? Right here. It was looking very similar here in this action right here. That's why I was even shorting it down here, because at least in this case, it still had, more than 50% downside.
Yeah, I mean, these are the ones that typically they go low and then lower again.
Yeah,
every single time. No, they're really good examples. And there's a couple other ones this week. We've discussed probably the most, I think it's probably the worst offender, I would imagine. I mean, you might bring it up before. Yeah, there we go. We need to mention it. So this one has been running. Well, it's run this week as well.
Yeah, this is the greatest daily chart here. You can't even see it. It's like $1 million over here, and this is only. Oh wait, actually, that's like 2 years ago. But like, this is so bad. Even here, which is like only 6 months ago, it was like, what is that? Is that like $2 million a share?
Jeez, that's incredible. And just, I mean, yeah, tell us about this one, because this is, you like how I introduced it is probably, you're not the only person who would go straight to Mullen straight away.
Yeah. So this, it's funny. This one also fits kind of like a different MO, right? So like, CLRB does these registered offerings. They do them from a shelf. They issue warrants. They do warrant exercise deals. You'll see the same thing with, like, most people probably know MBOT. I don't know why I can't think of some other ones off the top of my head right now, but they do offerings from the shelf. They do S1 offerings. That's like their thing. MULN is kind of falls in the bucket of like MLGO, CEI, if you remember that one.
Yeah.
HOLO. They do these private placements and they do convertible notes. So basically, what a convertible note is it's debt. So the investor is loaning them money, but they have the ability to convert that debt into shares of stock. And in this case, it's super dilutive because they can convert it at a discount to whatever the price is trading at. So it's kind of like this. Um, it's like death spiral financing where they can continue converting at lower and lower prices and getting more and more shares. So that's how HOLO is. That's how MOGO is. That's how MULN is. But you'll see this offering ability is low because they're not doing these like registered offerings. They're doing these private placements, which when they announce them, they actually don't really do anything in terms of impacting the stock. Like there's not really any reaction. But over time, there is just from the dilution.
Mhm. Yeah, I mean, for a long time, Mullen was just any pop is a good is a good fade. What's interesting though, I think about it is there occasionally has a little reset where they take their foot off the pedal and
Mm-hmm.
it might run for a day or two, and
Yeah.
then they're back on the gas again.
Yeah, exactly. And it actually turned out similar to this last time, right? But I also that just posted some similar examples of MULN because HOLO and MLGO kind of does the same thing too, where it'll be like sell, 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 take a break, and then it like rips everybody's faces off, and then sell, 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 and like MULN kind of does that. Let's see. Yeah, I liked it today because it did look similar to this. This was the last kind of dead cat bounce, right? Which is, I guess, kind of similar to what we just had here, sort of,
Yeah.
um,
Yeah.
where it kind of gapped down. But then I was looking at some other previous dead cat bounces. It was sort of similar to here. It was a little kind of tricky, although it didn't go necessarily up as high as the other one. Like this one only went up 100%, whereas this one went up, geez, like 400%. So it was definitely different in that regard, right?
Yeah.
But it has had like these never more than like 3 days, but it'll like have these runs where like you said, they take their foot off the gas, it'll run, and then they'll get back to selling.
Yeah, and just on this, like the visuals of being able to recall other charts, it sounds really important to your trade, and I assume that's why you build a tool around it.
Yeah, for sure. And I mean, yeah, like I think we talked about this the other day. Is I generally won't trade a ticker unless there's some sort of history.
Yeah.
Um, I like to see prior examples of how it's traded. I want to know if it's been a pain in the ass in the past. I want to know if it's been easy. I want to know, does it exhibit similar behavior? So that's always something I'm looking for, whether it's within the same ticker or like I showed you with MCTR, it's not necessarily the same tickers, but the same underwriter.
Yeah. I mean, MTCR also has that daily look as well of it doesn't, like you said, it's was it an IPO, has no history.
Mhm.
It does have, I mean, I accept it. I mean, I'm sure people cottoned on to actually the potential of it and made a lot of money on the long side actually this week.
Yeah, I know some guys that do long these. I do sometimes, but you do have to recognize you also can. They will dump on you even before they run it sometimes. So you have to be a little bit careful on that because they will. I guess I don't know why. Maybe they just weren't successful pumping it, but you'll just see that sometimes they'll just dump out of nowhere, and then all of a sudden you'll just be down like 80% in 2 minutes.
Yeah, yeah, yeah. Then you're crying, yeah, for sure. And the
Yeah.
one we spoke about was KWM. I mean, I think it's
Oh
since
yeah.
we mentioned it, I think it's worth just discussing um, why this was. I mean, whilst it did fade, whilst it potentially was not not an agenda play.
Yeah, because so this also sort of falls in like another bucket. This is like the SPAC bucket. So this is a SPAC where there's generally no dilution. In this case, they do have some convertible notes, but they're not registered. But there's usually no dilution. The warrants are always at 1150, which are always way out of the money. There's always a lockup, which is like 180 days. Sometimes there's going to be shares like with ILMN, for example. where there are a lot of shares that actually aren't subject to lockup. But the thing is, if you don't know the people that are holding those shares, if you haven't seen them involved in any of their stocks, like how it's anybody's guess, if they're going to sell them or not. So that's kind of how I think about it. Now, that didn't stop me from, I did short LIMN kind of against my better judgment. It worked out, but I regret it because it caused me to miss MULN. Because like I said, I usually try to say, but there were so many shares and I was like, how could they not sell them, at these prices? And I don't think they did. I mean, honestly, I don't know let me pull up the chart, but it didn't look like they were selling anything. Here we go. It actually came back. Like right around here, I was like, okay, they're clearly not selling anything. It's trading super thin. But yeah, that's kind of like my take on these SPACs is that there's no history. If you don't know the people involved, you have no kind of point of reference, then it's sort of hard to anticipate like what is going to happen. Now, I'm sure there are people that specialize in SPACs and have studied them and study how they move and they have an edge. I don't know. So I just stay away from them for the most part.
Yeah, I mean, and that sounds like a reasonable option. And what tend to see is like a lot of I think there's like, in short, I think there's two approaches to small caps in that you can be selective and you treat it a bit like poker in that you only play the hands that are your pocket pairs or whatever, or you treat it like blackjack and then you have to play everything.
Right.
And I think like it's very difficult to do something in between.
Right.
And I think like what we're describing typically is you wait until you get a pocket pair, you get your aces, kings, or whatever, and that is when you see dilution, when you see that history of fading, etc., or you see an underwriter you're familiar with. I don't know. Would you say that's fair?
Yeah, no, that's a really good comparison because I used to play poker and I feel like the way I trade is actually a lot of like how I play poker, where I'm trying to like anticipate what my opponent is holding, what cards they're holding, And so like if a negative catalyst is potentially coming, or I think it's a high likelihood a negative catalyst is coming, or like an offering's coming, that would be akin to like a weak hand, them holding a weaker hand than me. And then I do track stats and I know the odds, but it's sort of also similar to no limit hold'em, where the odds are only good if you know what the other person's holding, right? So like you could have pocket kings, but if the other person's holding pocket aces, then the odds aren't what the odds are,
Yeah.
But I just try to get myself in situations where the odds are going to be, I'm hoping the odds are going to be more in my favor. Like when I get myself in a position, I want to be in a position where like I've seen this scenario before. There's a higher likelihood of it working out than it not working out. And I just want to get myself in that sort of situation time and time again. But like you said, blackjack would be like the systematic approach where it's like, you can't be picking and choosing. You just got to, when it itself, you play it and you play it and you play it. Because if you start trying to like cherry pick, that kind of defeats the purpose of like the system.
Yeah, and I'm certainly not knocking. I'm not knocking either style. I think there are pros and cons of both, and I think if anyone can increase their frequency of trades, I think that's positive. But that being said, I think there's a degree of selectivity which can really help, and I think like you just touching there on the odds in your favor. And I think that's what like a checklist and like the all-day fades you spoke about it years ago before we went MIA is just have like an all-day fade checklist. And it might be something simple like, do they need cash? That adds a few percent in your favor or whatever.
Yeah.
I mean, that's typically how I operate. And I just, like I said, like before we started recording, like if there's like a reason behind it, and if I can start to and I guess that that's referencing what you're saying, if I can get a gauge of what I think their hand they're playing is, and what their goal is, I think that helps me trade it.
Yeah, exactly.
So there's a couple of things I wanted to go through if you still have time. We've touched on quite a lot of dilution there. I just wanted to run through perhaps quite quickly a few examples of, well, not necessarily an example, just explain like what an ATM is, for example, and I suppose like if you can think of some cases where they might use one. Um, I mean, and any dilution like linked to an ATM as well, like we can work through it.
Yeah, I mean, the ATM is like that's just when the company is able to basically just pretty much create brand new shares out of thin air and sell them into the open market to raise money. That's pretty much what it is. It's different from like a direct offering where they're actually selling the shares to investors that are buying them for maybe investment purposes, but like we talked about, usually just to
Yeah.
flip them quickly for a profit. Whereas the ATM, the company is selling the shares themselves or through like a sales agent through a bank.
Yeah, and I think like typically that's just something that a lot of companies just have available to them.
Mm.
So it's you don't get that shocking move like you would like with an offering at midday, for example. It just tends to be that trickle. Is that another example of where it pays to know the underwriter as well and perhaps get an idea of their MO?
Yeah, so the underwriter, yeah, I'll definitely take that into account, but also like the urgency with them needing money. So I would say the urgency and then also the history, because you want to see that they have the shelf. You want to see a history of them actually using the ATM. I had one example I'll never forget was this ALLR. It was funny. These guys, so you see how this ATM use. There was this one day where they basically had to meet. They were deficient with the Nasdaq stockholder equity rule, and what that means is that as a company, to one of the listing requirements is that you have $2.5 million in stockholders equity. So stockholders equity is your assets minus your liabilities. Um, and you can be delisted actually for not being over that level. And they only had like a couple weeks to meet this requirement. And they had the ATM. They had a history of using it, and not only that, they had a history of just it being fades whenever they used it. This is all ATM, just nonstop selling. And the funny thing was they would sell through the ATM, and then midday they put out another ATM and like sell more of it, which I wasn't even actually at the time. I wasn't even aware that you could do that. Or I had forgotten that you could do that because it's so rare to see that happening. But yeah, they just kept on unloading the ATM. But going back to your question was basically is that the urgency was there, the history was there. So yeah, there were two main things.
Actually, there's going to be a lot of viewers watching this, and they're like, "What? There's different types of dilution. That's crazy." Um, and then perhaps like the more common one, S3s.
Yeah.
I
So
mean, I don't know if it's fair to say more common, but yeah.
well, so an ATM is just part of an S3. So that's a shelf. So a shelf is basically the company registering a certain amount of dollars worth of potential shares, debt, whatever securities they want to sell to raise money in the future. So when you see an S3 filing come out, that's not the offering. That's them registering the amount they want to offer in advance. And then from that shelf, they can do these offerings. They can do an ATM. That's one method of using the shelf. They can do a registered direct offering, which is just selling shares directly to investors. They could even do convertible notes from a shelf, which is something that like MLGO does. So that's just all those offerings are part of the shelf. So you have kind of the shelf that gives you the ability to raise through ATMs, through stock, through debt, and then you do those offerings from the overarching shelf.
And on that, like what we typically see in the build up to that is certain amendments coming in. Are there clues? Is there like a typical storyline to that, or is it just does it change by case basis?
Um, so with a shelf, the amendments aren't really relevant. It's just buying the shelf, and then once it's ready, then they can do the offerings. I think what you're talking about is more like an S1, which is more
Yeah.
like they do an offering and then it's done. So I'm trying to think of one that they there was recently an S1 offering off the top of my head. Think of one, but that's the case where it's like everybody, there's not really any digging you have to do with an S1 offering, right? Everybody, if you go to us, if you go to Dilution Tracker, if you even just go to Edgar and see an S1, everybody, okay, they're doing an offering. Like you don't really need that. You don't even need to see the urgency or the cash need because them filing an S1 means they want to do an offering, right? So like you don't really have to look any further than that. But then it's for that to like know like the likelihood that it's going to come soon is you want to look for those amendments like you mentioned. So like RVYL today is a good example where they filed this back in February, and there's been no amendments since then. And generally, you're going to see at least one amendment, especially if there's been anything material since then. So like if they filed a new financial report, they're going to have to do an amendment, include all this updated information in that S1. So in this case, like there's really no imminent risk of an offering coming on RVYL until they amendment. But again, those are still really good opportunities. Just the simple fact that like the S1 kind of acts, I mean, not in the case of RVYL, but it kind of acts like as a deterrent to people like willing to buy and hold. Because like to get these squeezes, you still like a stock can be short crowded, but like you still need longs that are willing to buy it and willing to hold it to like get these squeezes, right? It can't just be done solely by shorts tripping over each other.
Yeah, yeah, absolutely. And then that's moving on to, I mean, we covered warrants, an equity line. You know, how important does that play in your stock selection?
Yeah, an equity line pretty much functions very similarly to an ATM. The main difference and the main kind of limiting factor is there's usually limits to how much they can sell in a given day. And most of the time it limits it to such that it's actually sort of irrelevant when it comes to like big high volume gappers because of like the limits. Now you have to look in the filing to see like what those limits are, but I'd say more often than not, there's such strict limitations on the volume that it won't really matter in any one day. However, like if you're swinging a stock, especially a stock that's like made a big move, and then now they're going to use an equity line for weeks or months on end, you're going to see that stock just go lower and lower and lower. But I haven't necessarily seen it have like a huge impact on like a day one high volume gapper.
Oh, that's interesting. Joe, I didn't know that. I didn't know there were caps on that and limits to that. What are the limits based on? Is it like market cap, right?
They're always different. There'll be like a dollar amount sometimes. Like they'll say you can't sell more than 500K in a given day, or it'll be like there'll be a limit to how much you can sell based on what the stock price closed at. They'll limit maybe the share amount. Also, because there's an investor buying the shares and then reselling them, there's also a limit on how much they can buy at a time. Like they can't just buy more than 10% of the outstanding shares at a time.
I mean, I think that's, well, the other, obviously, back to what I haven't mentioned is private placements. Are there any clues that's on its way?
So that's like with most things, it's looking at history. So like with Mullen, for example, like they just did one. I mean, I don't know if there was any way to tell like if it was, I mean, they do them all the time. I guess that's the clue, is that the one's probably coming. The thing is, they don't really usually don't impact the price, I'd say, unless it's like, I think I've seen it where it does impact, where if it's like, I think IMNN was a recent one where, because it was like running super high and all eyes were on it and people were longing it, and they dropped that news, it's kind of shocking to people, then they kind of panic out. But like if the stock's not doing anything, like I think when Mullen initially announced the private placement, there was nobody was really trading it. So it's like, there's no reaction to it, And also because the shares can't be sold immediately, right? It's a private placement. So the shares that are being sold aren't registered. So you can't, like the investor can't sell them anyways.
And is there any clue though to the MO that in terms of perhaps obviously touching on that someone's like could be hedging against said offering? Are there any clues perhaps to an MO of certain people? And again, does that just go back to looking at the history of a company?
Yeah, there's one. Let's see, which one was it? There's this fund, Armistice, that participates in all of these, a lot of these offerings. You'll see their name on a lot of these offerings. And let's see, where is it? But I noticed that like so one of the things we could do with the underwriter lookup is we can also filter by the type, warrant exercise, and then also the fund. So in this case, well, I was searching CVI and Armistice because they were both involved And I was searching this because of IMNN. I thought that a warrant exercise was possible, so I wanted to see what other charts were similar. Um, and you kind of have these like this kind of action. Like I think they did a warrant exercise here, but like they didn't make it easy at all. Now I don't know exactly what they're doing. They're definitely shorting. Like they 100% are not going to just let this come all the way back down and not have a short position, right? I don't know how they're doing it, but for some reason they have this action like this. That's one. This was kind of a choppy one. Let's see. TNON. This was also like all day, and IMNN was like this as well. That was BJDX. And then SLXN was one. Yeah, it was this day, which was also similar to IMNN. This was the first day. They ended up doing the warrant exercise up here, but then I can pull up. So I was looking at those charts before IMNN, and then so I kind of knew that's sort of like my process. So that's why I kind of knew what to on that one. Let me get out of on-demand mode here.
I mean, it's been truly fascinating seeing your process, and it's funny actually. You work much like Nate as well, in that like he'll quite often say X looks like Y, and it's such a positive and useful way of thinking, in my opinion.
Yeah, he definitely has a better memory than I do. I have to use like tools.
He has a better memory than everyone, I think.
But yeah, like as you can see, it's kind of the same crap action here. So it's like even like seeing that can also be just at least a good enough signal to avoid something, even if you can't profit from knowing that information.
Yeah. Yeah, I mean I think that's such a powerful tool, and I think that leads nicely on to, I mean, I think you've touched on a lot of them, but just for the viewers, just to clarify which tools you're using for your research, and I suppose as well, like how AskEdgar goes about actually obtaining that information as well.
Yeah, so I mean, I'm using obviously AskEdgar, and then we have a couple of bots like I showed you where we can look up basically historical charts. And then I'll also use Flash Research as an excellent tool as well for this. I don't know why it's not showing up here. We'll have to sign in, but people probably are familiar with Flash Research, but you can quickly look up historical charts for a company. We post them as well in another bot channel. This is the historical charts channel. And one of the cool things that we'll do is we'll post the news that happened around the time of the gap, as well as any offerings that occurred around the time of the gap, as well as the historical float. So the float at the time of the gap as well. So like this one, you can see did an offering. This was BJDX. I didn't even realize this one was running, but yeah.
No, brilliant. And I suppose with AskEdgar, so how does it differ from obviously the Discord and the platform?
So here this is where we basically so we use AI to, I think you asked like how do we collect the data? We basically have like monitoring all the filings, and we just basically use AI to extract all of this information. And then that's not it though. We have me and a couple other people that have to manually check stuff, because the thing about filings and news is that stuff is repeated over and over again. So like they'll do an offering and then they'll announce the closing of the offering, maybe twice. So then you'll have data coming in where it looks like there was 3 offerings, but there was only one. So you have to like check that. So it's a lot of like deduping and stuff. But we're basically just using AI to scrape all this information, the dilution information, that is.
Yeah, I mean that's so cool. Yeah, and I mean I think that pretty much wraps up what we plan to chat about tonight. I don't know if there's anything you'd like to add.
No, I mean, I think that's it. I think, yeah, the gist of it is like how I look at this stuff is more about like looking at an overarching fundamental pattern, rather than like, okay, like they have an ATM, like, okay, the stock's going to go down, or they have warrants, it's going to go down. It's like, well, who's holding those warrants? Like, are they, is it an investor that's like invested in the long term? Or if there's an ATM, like, have they used it before? Do they even have a need to use it? So it's like, it's kind of just, I guess, looking at the context and looking at the history is the most important thing, I think. And then, as I mentioned before, the catalyst, like, what's like the reason for so-and-so to happen? What's the reason for an offering to happen? What's the reason for them to use the dilution at this point?
I mean, I think I don't know if we're the sad ones or if we're in the majority, but I think this is so interesting, and it's been so great to get an insight into what you do. And I can already see like the power of, I mean, that's what typically usually makes a good tool as well, is something that the creator wants to use on a day-to-day basis, which I can clearly see that you've done.
I'm the biggest power user on here. If we look at our user statistics.
Oh, really?
Yeah, I'm the number one user on this tool.
And you're the one that gets it for free as well. So you're definitely getting your value for money. And just before we wrap it up, where can everyone find you?
So I'm not like super active on Twitter, at least not my own account, but I'm JMT415. And then a little bit more active on the AskEdgar Twitter, which is at AskEdgar.io, I believe. And
you got to shout out your YouTube channel as well, because
oh yeah.
For anyone watching, like bite-sized dilution videos with specific examples. I looked at like you deserve way more subscribers for the quality of content that you're putting out, and I genuinely mean that. It's fantastic. I just want to thank you again for your time.
Thanks for having me.
I really love this. I've loved this conversation. I hope in the future we can, with some more examples in the next, few months or whatever. I hope we can run it back and really break down actually why some of these moves happen, because I think it's fascinating. Watching your content and listening to you, like how important it is just to find that agenda, because like some things, they need cash and they have paper to sell. Actually, their MO of, delivering that might be, you see this like quite a lot, don't you? When like it doesn't happen in day one, it'll happen day two, for example.
Right.
And there's that theme. Mm-hmm. So I think it's fascinating. Thank you so much, Jason. Loved it all. And we'll speak to you soon. And thank you everyone for watching. Peace, guys. Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.